Good morning. Welcome to Commodity Chat on this Tuesday, December 17th, 2013. This shoot is being done at 8:10 a.m. Here I'll be giving a wrap-up of the commodities complex, both fundamental and technical, as also the trends that are likely to emerge in the next few days. A couple of events that are likely to grip the market today and tomorrow are the Fed or the FOMC meet in the US today and tomorrow, outcome of which is likely to be announced late tomorrow night. The second is the RBI credit policy that is to be announced tomorrow. Now, I'll give a brief insight into both these events and what could unfold in the coming day. FOMC meet, which is starting today and likely to end is ending tomorrow. QE tapering is on the table, and even as you've seen in the past few weeks, that the data from the US have been extremely positive, and the markets are now considering that there could be some tapering as early as tomorrow. Whatever be the extent of tapering, even if it begins tomorrow, it's likely to have a huge impact. Now, the other section of the people feel that the FOMC would not act unless all cards have been opened up on the table, and nothing is likely to happen before March 2014. Now, this divergent view is keeping the markets on tenterhooks, and limited volumes have taken place over the past few trading sessions, and this is likely to continue today and tomorrow. The US dollar index is expected to move accordingly once a decision is announced, and there could be major upswings or downswings, especially in bullions, once the news comes out into the market day after tomorrow night, which could see in the MCX exchange on Thursday morning. The next important event tomorrow is the RBI credit policy. Now, the RBI credit policy, three options are open before the RBI to take a decision tomorrow, especially in view of the fact that inflation again has risen up sharply to record highs. One is a repo rate cut of 25 basis points. Second is a change or an increase in the base lending price. And the third is an increase in the CRR. The markets have already discounted that the repo rate would be increased by 25 basis points. This is the rate at which the banks borrow from the RBI for their lending norms. Hence, this is likely to have a direct impact on the INR, and the stock markets are likely to see major swings during the course of the day tomorrow, especially after a day of consolidation today. Now we come to the individual items. One, Nifty is closed at around the 6150 mark yesterday, which tended to act as a strong support. Expected to open higher this morning by about 40 basis points, closer to the 6200 mark, 6190 to 6200 mark. Not expected to break above 6250, 6260 in the next few trading sessions, unless the RBI credit policy and the Fed news turns out totally positive for the international markets, that it is likely to break above the 6250 to 6300 mark, in which case fresh highs are likely to be seen again. On the downside, 6150 as of now is a strong support zone, and below that 6080, 6030 are strong supply zones. So expected to trade in the range of 6030 to 6300. INR closed at around 61.73 yesterday, unable to break above the 62 rupees to a dollar mark. We feel that strong resistance is at 61.30 to 61, and on the flip side, support is at 62 to 62.30. So the range could be 61 to 63. Unless 63 is taken out, fresh weaknesses is not likely to emerge. It's likely to consolidate at around the 62 rupee mark. Surely the RBI is likely to take whatever steps it takes to strengthen the economy, and for this INR is going to play a dominant role. Nifty, we've been following a few stocks of late, and in the coming sessions, we would be starting a separate segment on giving our positional calls in equity scripts, as also in NCDs in the days to come. Some of the scripts that we've been following for the past 1 month and taking long positions, which we have booked recently, profits are in Aurobindo Pharma, Sesa Sterlite, Tata XLC, BF Utilities, and Persistent Systems. From the next segment onwards, I'll be giving a separate wrap-up on the Nifty, as also individual stock recommendations, and I request all viewers to view it to our segments on a periodic basis. Now I come to the individual MCX commodities. Gold is now trading at $12.40, hit a high late last night of $12.45. Short covering rally has seen the commodity move up from the $12.25 mark, which was in a few trading sessions back, to $12.45 last night, now trading at $12.40. Support is at $12.30 and resistance at $12.50. A breakout either side is likely to see further moves. Speculative moves are likely to take place today and tomorrow, and hence we would recommend that those are false moves, and clear trend would emerge only after the Fed outcome is announced. Now, a break below 1210 could see the next support of 1170 to 1180. Now, if 1170 to 1180 is taken out, a major fall is expected, even up to $1,000. On the flip side, 1265 to 1290 acts as positional resistances. Next positional breakout would be only on a close above $1,300. On the MCX, gold trading at around the 28,850 mark. Strong support is now seen at 28,700 to 28,600 and resistance at 29,000 to 29,200. Silver is trading a shade below $20. Hit a low of 1950 a few trading sessions back, rose sharply due to short covering yesterday to above the $20 mark to 20.10, now at 19.92. Support is again seen at 19.80 and 19.50 and resistance at 20.10 and 20.30. On the MCX, unable to break 44,000 yesterday, they consolidated at around that 44,300 mark and rose sharply along with the dollar movement in late trades to closer to 45,500, closed at around the 45,300 mark. Support is now seen at 45,000 to 44,800 and resistance at 45,600. A break above could see levels of 46,000 to 46,500 in the rally even before the Fed outcome is announced. Individual base metals we'll be talking about. First, copper. Copper is positive now on a close above 462. The close above 462 could test 464. Positionally above 464 could take it up to 470. On the downside, strong support is now seen at the 458 to 457 mark and on a positional basis at the 454 mark. So expect the trading range during the day today to be 457 to 464. A breakout either side could see a 3 or 4 rupee further move. Immediate upside above 462 could be 465. Nickel is trading in the range of 860 to 880. Zinc in the zone in the range of 120 to 125 and lead in the range of 131 to 135. Aluminium, after hitting highs in the past few trading sessions of 110.50, has now gone back around the $109 mark and is in a no trade zone. Crude is now trading at around the $97.35 mark, closed at around the 6030 mark. Now, and if it sustains about 6030, positive till 6050, 6070 and 6100. Downside immediate support is at 5980 and positional support is at 5960. Overall, it's expected to open flat depending on how the INR market is expected to shape up. Natural gas has seen correction in the past couple of trading sessions after hitting highs of around the 275 mark. Hit a low yesterday of exact support at 260 and trades around the $264 mark. Now, strong support again at 260, only a break below will see further downside. On the flip side, if it sustains about 265, 266, it could test highs of 270 again. Now, overall, the past few trading sessions, we've seen very, very limited volumes because of the markets are waiting for the outcome of the two events which are likely to unfold today and tomorrow. Hence, traders are advised to trade less till tomorrow, till the outcomes are announced. Now, in the next few sessions, we'll be giving insight into the NCDX complex also. Over the past couple of months, we've been long in two items on the NCDX. One is castor seed and dhania. Dhania, we've seen a sharp upside over the past 2 to 3 months from 6,000 to 8,500 mark, which we have booked recently. Castor has also seen upside of over 1,000 rupees, which has been cashed out recently. Jeera looks positive as of now. Soya oil is sideways correction from highs of 750 to around the 690 mark, trading in a zone of 680 to 710 mark now. The next sessions we'll be giving insight into the NCDX markets also, and I would request all members to have a look at our NC-dates calls also, which we will be giving. For further trading calls and commentaries, please visit our website at www.akshayashiv.com and our Facebook at facebook.com/Lotus Advisory Services. Have a safe and profitable trading day. Thank you.